Everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today, we're going to whip through Twitter, see what people are talking about. Obviously, I'm going to interject my financial opinions as we go. We're going to be talking about wealth building, finances, and commodities or the financial markets. We could also be talking about career development, something like that. And I'm going to share all my opinions as we go. So let's dive in. Let's take a look and see what Twitter's talking about. Again, it's at funding_finance, and it's finding-value.com if you want to sign up, become part of our community. And we do have a question and answer session at 7 a.m. On Saturday. So coming on down, Eric Podwowski, he says, I have a very similar thing to this guy, so I wanted to share this. He goes, there I was sitting in my cubicle about to get paid. I entered my manager's office to discuss my first promotion since graduating from college. He slipped me a torn piece of yellow paper at the beginning of the meeting that stated 8.2% pay raise, a $500 bonus, and a senior design engineer title. That was my reward for 2+ years of hard work and dedication at this corporate engineering firm. I wanted to scream in his face, but decided to calmly explain how a typical promotion salary raise is 10 to 20%. Inflation runs at least 2% per year, and the bonus is appreciated but not significant. His response was, meh. I left that meeting realizing the traditional path American society sets out for you is designed to suppress you. So I took some time to learn how to exit the system, which typically includes getting paid and saving your money in dollars. That's when I found the solution, Bitcoin. Why Bitcoin? Because Bitcoin frees you from the fiat currency inflation. It cannot be debased contrary to the unlimited ability to print new dollars, which is happening today. Since I found the solution in early 2019, I began saving in Bitcoin instead. Bitcoin's up a lot, dollars down. PS dollars are down drastically more if you track real inflation versus the skewed CPI metric that the government reports. Exiting the system by saving my net worth in Bitcoin has given me a new outlook on life. I can plan for the future knowing that my purchasing power will keep increasing over time, leading to better decision-making day to day as I choose to save rather than consume. So if you're tired of being beaten down by ever-increasing prices, remember this mantra, opt out, buy Bitcoin. And there's the guy. What I would say is Bitcoin it probably works under certain market conditions, and I bet you it doesn't work under other market conditions. It's a measurement of liquidity in the system that most people think. What I would rather do is learn what I have been preaching. Ratio investing, knowing where the value is in the market, buying undervalued sectors, and then investing in those sectors for a decade, whenever the cycle is hot for those sectors. The valuation of them being cheap is signaling that they're not hot at the current time. And as that valuation increases, it becomes, that's where your valuation or your purchasing power increases, is that valuation change against other assets. Going just into Bitcoin may not work for you because Bitcoin, it doesn't really have an established history to know if Bitcoin will be around in 10, 20, 30, 40 years. I mean, you could lose everything in Bitcoin. There is no established value for it. It's just I guess it's a Ponzi scheme, really. It's a scheme where more people need to adopt it in order for it to increase in value. More money flow needs to go into Bitcoin for it to go up. There is no intrinsic value in it, in my opinion. So I would be very careful doing what this guy is. But one thing I will say is, I did this gigantic project when I was a senior engineer. They wanted me to transfer a facility to another facility. And I was on both sides of the team. I was on the transfer team, and I was on the accepting team of where this product was going. We destroyed it, right? We transferred it over. I handled everything from the manufacturing engineering side. I even handled it on the transfer team, being kind of a project program manager. I went and I went over to the supplier who was real close to our facility. I trained them how to build some of these things, how to remove pieces out of the product, and did all of these things. Basically, I the project was 1.5 million under budget. We absolutely crushed it. We transferred it faster than when they wanted it, and obviously we had some growing pains. So I trained our suppliers. I brought everything into the facility, trained all the employees, did all the work instructions myself, laid out the entire area, did all the layout, got it in all the chemicals, got it all approved, all this stuff, guys. It was ridiculous, right? Well, I got a 3.99% pay raise and a $300 bonus, just like this guy. And ever since that day, they ruined me. They ruined me. I was like, nope, I'm not trying hard again, guys. Sorry, not my thing. But I wanted to say that very similar to this guy's experience. At least I don't know if this is 2 years. I don't know if this is an 8.2% pay raise for 2 years or what. But yeah, you're going to have to go a different route if you want to get paid more money. I'll just say that. Rising inflation doesn't mean the Fed will fight harder to win its inflation fight. It means it's already lost. Investors still don't understand the Fed can't come close to putting the inflation genie back in the bottle without creating a far greater crisis than 2008. Yeah, it's out, and I don't know how they're going to stop it. The rich get their income from assets, not labor. Totally agree with that. If you're getting your money by labor, it's a rough ride, guys. You gotta save money, part of your income, and buy assets with it where they generate income. Coming on down, it says, love your job. Remember, you're just one personnel change away from hating it. I got another story here, guys. So I used to be a manufacturing engineer. They put me in management because they were asking, oh, you want some experience to manage people? I said, sure, that's fine. Yeah, as long as it's a small team and I can move into a position where I'm managing salary, employees. It's much easier to manage a salary employee than hourly. And he's like, okay, we'll put you over new product development. So I ran new product development for about a year, and they're like, oh, he's doing a really good job. We're going to put him over production. And I was like, guys, I already told you I want to be over salary employees. I don't want to be over an hourly. And then they put me over hourly employees without really, they didn't care what I thought. They just did it. And I ran that for a long while, but I didn't really like it. So this is true. Love your job. Remember, you're just one personnel change away from hating it. And yeah, that's partially true. 40 plus years at one job. I know several people in this position, and none of them have achieved their financial goals. A single employer will never give you the success that finding new opportunities will. I don't know if I agree or disagree with this, but one thing you have to do is you have to take your labor and put it into assets. So I don't know if these people are putting their labor into assets where that asset can generate cash flow, which then increases your cash flow over time. Then you save it, and then you compound it. So it's not about exchanging labor for cash and then becoming rich from it. It's about a couple of different things. As you become smarter, the way that you become smarter is to increase the velocity of money into your pocket on an hourly basis. So you're working more efficiently. You're getting paid more per hour. And I think where people get stuck is they get in these positions where they dump a whole bunch more time into it for negligible amounts of money. And that might be necessary if you want to move to a level that's way above the level that you're at. You may have to take almost a hit on your dollars per hour for for 5 years before you get to another level where you actually start making more money on a dollars per hour basis. But that's how I measure it. It's a dollars per hour. If you're at $20 an hour when you start, Okay, then the game begins. How do you get to 40? How do you get to 80? How do you get to $1,000 an hour? These guys that make copious amounts of money, they're making far more. They might be making $100,000 per hour for some of these billionaires. Like they transition through that. So the way that you make a lot more money is you have to become way more efficient at putting money in your pocket every single day or every single hour, whatever time unit of measure that you want to do. One way that you can do that is to buy assets that put dollars in your pocket continually. So you have to look at it from a different perspective. A guy or girl, they can look at it and they say, okay, I want to go work. And then I ask them, well, what do you want to do? And they're like, well, maybe I'll be an engineer. And I'm like, well, what lifestyle do you want to live in the end? An engineer will get you 40, 50, 60 bucks an hour, maybe. That's it. Now, that seems like a lot of money for a lot of people. But what if you want to go more than that? How do you get $200, $300, $400 an hour? That is what you need to think of. You have to become an owner. Then you have to figure out how to really get that cash coming into your pocket. You're going to have to invest. You're going to have to increase that cash flow. It says, got a bill in the mail a few weeks back from my health insurance. I owe $95. Fine, I'll call them to pay. And they say they owe me $100 actually. Even better. Hadn't received it, so I call again after a couple of weeks. Now they say I owe $95 plus an additional $440. What? Or huh? Guys, I had the twins and they were premature babies. They were 27 weeks. I had so many bills coming from the health, from the we'll call it from all these different areas that I had no idea what I was actually getting charged. I didn't pay anything until they figured that all out and what I actually owed. But there was a whole bunch of different things. Now, there's a bunch of stuff in the medical industry that's just absolutely retarded. Like, I don't know what the normal price is when you go in anywhere for whatever the service is. I could go into, my kids were in the NICU and they were in there for a long time. And there were a whole bunch of doctors that were obviously seeing the kids. Some of them were in the hospital network. Some of them were out of the network. And I have no idea if they're in network, out of network, or what the heck is really going on. If there's something that the kid needs and the doctor orders this person to come help them and they're not in network, how the heck would I know if I'm not even there? So the whole health industry needs to be blown up and put back together, in my opinion. It's pretty confusing. It's not straightforward. You start dealing with the insurance, then you call the people directly, and nobody knows what the heck is going on. That's my experience from my end, working through. That was a few $1 million because we had twins, 27 weeks, twins, and they were in there till week 48 or 9 or whatever it was because they had problems eating. And there was 2 of them because they were twins, so I was getting all these different charges, and it was confusing. I'll just say that. Let me tell you about parenting. It's great. It sucks. It's hard. It's easy. It's tiring. It's rewarding. I think that sums it up. Did I miss anything? I'll just say this, guys. You will be cleaning so much. It's ridiculous. That is what I'll say as a parent. You just clean and clean and clean. You cook, then you have to clean after the kids eat and they drop it everywhere. So you're vacuuming 24/7. You're picking up all the stuff that the kids put on the ground, which is nonstop. You clean their clothes, you clean the kids, you clean yourself, you clean your clothes, you clean everywhere where they play, you clean the sheets that they sleep in, their clothes. You clean everything. Like all I'm doing, like 25% of my life is probably like cleaning everything. But that's what you get to look forward to if you become a parent. It's basically cleaning. the way that I view it. I mean, it's fun, but there's a lot of cleaning. It says, you all want to be Warren Buffett. I don't. Why? He might have a lot of money, but he's 92 and the money will be left to someone after he dies. He lives in a crap hole state, drives a crappy car, and eats in McDonald's. I don't want to be like Warren Buffett. Do you? I don't want to be Warren Buffett either. I don't really care. I'm pretty happy with my life and the way I've set it up. It'd be nice once I drop my current job, my full-time job. That would be really good to drop that at some point, which hopefully I will soon. And then I think I'll be even happier, even happier. So yeah, I don't want to be Warren Buffett either. Here's the average annual wage by age. So if you were to look, a lot of people probably watching 20 to 24, 38 grand, 25 to 34, 53 grand, 35 to 44, 64 grand, and about 64 is where it peaks out. It says, are you an above average earner for your age group? Yes, I am. I will just say that. But that's what the average is. So you can see how you stack up against the average there. Wow, COMEX silver registered inventory down 3.2 million ounces today to just 27.6 million ounces. 1/10 of last year's deficit. The noose is tightening and the market is about to be cornered for silver. And then we still see the price that's down. So that's very interesting. Inventories are really low, guys. Even aluminum and copper, they're all incredibly low, and the price is just kind of sitting there. It says, imagine riding ZIM bonds to zero while waiting for the 5% risk-off bounce. This is Africa. If I was playing for lower yields with this kind of positioning and market action, I would be crapping myself right here. That's just me, though. Double top in the market breadth of the S&P 500. That's definitely not looking too good, and it definitely looks like it wants to go lower. Remember the Batman pattern. There's the Batman pattern, and then we'll probably head lower for a good little while. Recent studies show the average age of a millionaire is 49 years old. The underlying point of this stat is that it usually takes about 30 years of saving and investing to make it. The sooner you start investing, the sooner you start the countdown to being a millionaire. And what I would say there, if you really want to accelerate it, there's a couple of key things you really need to learn. One, start soon, invest strong, and go for it. Two, after you start investing all that money and starting strong, you need to know where to put that money. The three pillars that I teach: ratio investing, market conditions, and technical analysis. That's how you can get above everyone else. But you have to take a long-term viewpoint, a decade-long time frame. The short term, people just get slaughtered, guys. They get slaughtered. They lose money. All these penny stocks, throw them in the garbage. Get rid of them. You don't need a bunch of penny stocks to get rich. What you need to do, in my opinion, and this is not advice, this is just how I did it myself, is if you want to make money, you don't want to go after the small stuff necessarily. You want to go after cash flow. Chase the crap out of cash flow. Find very unique situations in the market where things sell off a lot, where that ratio gets really cheap. Then when you start to see it turn using technical analysis, you look at the market conditions. If you think you're going from a low inflation to high inflation period, you invest a buttload in the companies that can generate a bunch of cash under higher prices of commodities. That's how I did it. That's how I really boosted my net worth. And I didn't do it in penny stocks. I didn't do it in gigantic, Walmart companies, even though those might be okay. I did it doing a big, big bets in a very cheap environment for oil and gas and all these other ones. That's what put me up over the edge. And then you have to figure out when that rotation is done of money. And it's not done yet. Commodities are still incredibly cheap. It says, do FinTwit experts not understand that fund managers can't just position the day before a move? If possible, they must position themselves, their customers, in advance of an anticipated move. Thus, they might appear to be early, sometimes yet ultimately be right. And he is completely right. When I'm looking at stuff, I'm trying to position myself and others, whoever are on the website, before the move occurs. It gives you time. It gives you time to cost average in. I call it sprinkle. And just because something breaks the pattern doesn't mean it's going to immediately go higher, too. It might take some time. You need to know that as an investor, that things just don't go up. You can't just predict the day before, buy a bunch, have it go up, and then pop out of it. There's no one that can do that. And if they say they can, they're full of crap. All these guys that made a bunch of money took a longer time frame and rode the big picture view moves. The Jesse Livermores who went bankrupt 3 or 4 times, and I don't want to be him. The best trader was a guy who went broke multiple times in his life and committed suicide. And I don't know his wife. I mean, I guess 3 other people committed suicide or something like that with his wife, his ex-wife, or whatever it was. But if the best trader went broke 3 times and died broke, I mean, I don't know, guys. That doesn't seem like trading is for me. What I do is I invest. I try to find the best entry points using 3 pillars: invest big, ride it. Not trying to time the things in the short term. Goring and Rosenzweig investor letter are a must-read for any natural resource investor. They do have this out. They cover everything from oil to natural gas, base and precious metals, and agriculture. I went through this and read it. Quick, just a quick synapse on it. They're very bullish everything. They think that we're in a big commodity bull market and that we're going to go much higher. They're bullish nat gas. They think that the Henry Hub's going to eventually work its way towards international pricing. They think shale's got problems and that oil is going to squeeze up and we're going to run big deficits. They think uranium's going to go a lot higher because we're going to run into deficits in uranium. They think agriculture and fertilizer is going to go higher as well. That's to sum it up. Looking at the recent sales transactions, house prices have accelerated significantly in the last 4 months to record levels, now growing at almost a 10% annualized rate. Wait. I thought we were in a housing crash, guys. Where are my crash bros at? Housing prices, purchase-only index, moving up 10% annualized rate. Seems pretty powerful. And that's what we were expecting in an expansionary phase of real estate. Cuppy. It's important to remember that every financial crisis seems to involve Citigroup going to the low single digits and getting bailed out. Why should the coming crisis be any different? Below 40 and all hope is lost. So here's Citigroup. $40 is the bottom over here. If it breaks 40 to the downside, good luck. What was your first ever dream job? Well, my first ever dream job, when I was a kid at least, when I think of dream jobs as a kid, I wanted to be like a hockey player or a baseball player or something like that. That was my first dream job. I don't know about you. That was mine. Grady says, that's very nice. Perfect bullish falling wedge at the end of a longer decline. In timing band for a larger cycle low and at a weekly plus monthly time frame support. A move up across the falling wedge would be an around the apex move, my own term. So around the apex, this is the apex, around the apex move that we've been seeing. And it almost seems like all of these patterns come to a tip. They force the pattern to the downside to get everybody afraid. The big guys load up, and then they squeeze it to the upside. Will this happen in gold? I don't know. We'll find out here shortly. But that's what the chart looks like. That generally works its way to the upside, not the downside, with a falling wedge. With the East taking over, the world will move from a financialized debt-based economy to a real asset-based economy. This will power the glorious commodities bull market even further. This untouched chart was the roadmap for the 3.5 years ago and still is. This is the CRB index versus Dow Jones, and we've got a big move to the upside. We've done first wave, second wave, and we got a big wave that will break out of all this stuff rocketing to the upside. So that is the CRB index. And that's where I'm going to end it, guys. I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. But that's what we've got. Everything still looks good on a big long-term view. Could we get a slowdown in the market? We always can. The overall stock market, NASDAQ, look like garbage. Bitcoin, Ethereum looking pretty toppy. Could we pull back? Yes, we could. Just be patient. This is going to be another buying opportunity in a big long-term bull market in commodities. So that's what I've got. We'll catch you guys later. This is Finding Value.